Hey, in this video we're going to work through the Festive Toy Company, posting the inventory and sales transactions to their T accounts. So you should have in front of you the Festive Toy Company worksheet with the T accounts and the worksheet for the chapter which has Festive Toy Company in it. So let's go. Number one, purchase $50,000 of raw materials on credit. So what are we going to do? We're going to pick up another $50,000 worth of raw materials, and on credit I think means accounts payable last time I checked. So there's number one. Number two, use $19,000 worth of direct materials in production. Now let's just make sure where we're going to put things that we do in production. Remember, that is the work in process inventory, is where we accumulate all the costs in the factory. Okay. So right now we have $19,000 worth of direct materials. So we're going to take our direct materials and we're going to put $19,000 right there in the works in process inventory. And we've been storing those materials up here in inventory. So I'm going to take the direct materials out of there. How much was it? $19,000. Hey. Number three, use $21,000 of indirect materials. $21,000 of indirect materials. Well, I'm going to call this IR for indirect materials. It's $21,000 worth, and it's going to come out of the inventory. Now, indirect materials, we know, are part of the overhead calculation, so we're not going to put it to work in process now. We're going to take our $21,000 of indirect materials. Why did I put IR? Indirect materials of indirect materials of $21,000 right there. Let me change this to an I. Okay. Number four, incurred total labor cost of $58,000, which is paid in cash. $58,000. So what are we going to do? We're going to pay cash of $58,000. I'm going to put it right here. Now, where is that going to go? Well, we paid $58,000 in cash, right? Let's see if we can learn more. We used $18,000 of indirect labor. Indirect labor is overhead, isn't it? IL. $18,000. $40,000 in direct labor. Direct labor goes to work in process. And how much was our payroll? 18 and 40 is 58,000. There you go. What else did we do? Well, we spent some money. Number seven, we incurred overhead costs of $16,000. So I'm going to just call this miscellaneous, MSC, for $16,000. Altogether at this point, we have spent some money for overhead. We have spent $21,000, $39,000, $45,000, $55,000 worth of overhead, right? Well, what's the next thing to do? We're going to apply our overhead to the jobs at 150% of direct labor cost. So here's our direct labor, $40,000. We're going to apply factory overhead of 150% of that. 150% of 40 is $60,000. And we're going to take it out of our overhead account. It's just applied $60,000. Okay. What's next? Number 9. We transferred completed products with a cost of $150,000 to the finished goods inventory. So in the factory here, we had been working on a lot of stuff, and now 150,000 worth is done. So we're going to take it out of our work in process inventory, and we're going to move it to our finished goods inventory. Out of work in process, over to finished goods. Out of the factory, into the warehouse. Now, that's where all that stuff's going to sit, of course, until it's time to sell it. So let's go to number 10. Sold $550,000 worth of products on credit. Their cost is $250,000. Hey, do we have a sales count? Yes, we do. So we sold $550,000 on credit. On credit, I think, means accounts receivable, doesn't it? So debit accounts receivable. And then there's part 2 of that entry where we do the cost of goods sold entry. The cost was $250,000, so our cost of goods sold is going to be $250,000, and that money came out of the finished goods inventory. That's out of the warehouse, sent it to the customer. So here's where we put the money into the dollars into the factory. Then we finished stuff and moved it to finished goods. Boom. And now we had some of our finished goods and sold it, and it became cost of goods sold. So that's basically the flow of how our costs here becomes cost of goods sold here. The rest of those costs are sitting in either the finished goods inventory or the work in process inventory. Now at this point, believe it or not, we have an income statement. We have an income statement. And it looks like this. Sales. I don't want to do it there. I want to do it here. Sales. $550,000. Cost of goods sold. $250,000. Gross profit. $300,000. We're getting to an income statement. So this important stuff then, huh? Well, let's see if there's any loose ends. I'll tell you one loose end is up here in my manufacturing overhead account. Because actual factory overhead, number 11, was $55,000. Is that correct? Well, let's see. 21. That's 39. 16. Yep. $55,000 is what we spent. We applied $60,000. So we applied 5 more than we spent. Wow. Well, that doesn't make sense. So we have to fix it. We should have applied exactly what we spent, shouldn't we? So what do I have to do? I have to reduce my applied down to what I spent. So I can't take credits away. I give it a debit. $5,000. Now, what shall I adjust? Well, I got to credit something. Well, think of where all these costs ended up. They ended up first in work in process, then in finished goods, and finally to cost of goods sold. So it must be cost of goods sold that is wrong. So I'm going to debit overhead for $5,000 and credit cost of goods sold for $5,000. I had over applied by $5,000, so my expenses were $5,000 too high. Now they're correct. I've reduced them, the applied down to the 55 that we spent, and that also reduced cost of goods sold to $245. And that is Festive Toy Company.